Hello everyone, welcome to the Financial Information channel. My name is Marvin. In this video I'm going to review the Square stock that has been requested quite a bit during the last few weeks. The company reported earnings this week, so now let's take a look how the business works and how they did during the earnings. And the first thing, we're going to take a look how the business works. Square is a payment system and it is mostly focused for small business. And the device that you see on the screen allows you to read credit cards for payments. However, they have different payment terminals for small business. And Square has done a really good job designing those payments. It is used for a lot of good companies. One of the major companies that is using the system is gonna be Apple. When you go to an Apple store, they're using that system because it makes it easier for the client to pay the company. Now, one of the major competitors is gonna be PayPal. However, PayPal charges 2.9% plus 30% fee for that transaction. On the other hand, Square only charges 2.75% without any additional transaction fees. And that makes it appealing because a lot of small business want to use a really good system to receive payments. And in addition, this payment system provides the business a lot of analytics. Now in 2017, the company announced Square Capital and Square for Retails, and those are loans that are going to be provided for small business so they can actually succeed better. And that's a good approach because you want that small business to succeed so they can use a Square system. Now the company just reported earnings and they actually did really good. Now the company beat the EPS by 2 cents. And it beat the revenue by 12.15 million. The revenue year to year is 44.6%. The company reported a really good quarter. Now let me show you on the following screen how they have been doing during the last few quarters. And as you can see, the gross payment volume has been up 31% year over year. At this moment, the amount is at 17.4 billion. And the revenue for this year, the company is over 0.33% year over year. The revenue for this quarter is at 585 million. Now, and one of the key metrics is gonna be adjusted EBITDA. And as you can see, the company had 34 million. It's around 195 year over year. So in a few words, the company has done really well during the last few quarters. The company has posted a growth of over 20% and the last quarter has been over 30%, which is actually excellent. But now let's take a look at one of the most important things for the future, and that's going to be the guidance. The company had the guidance around 34% and they expect to have 37% for the next quarter. And the adjusted EBITDA margin is going to be around 13%, which is going to remain the same. And those were good news for the next quarter. But now let's take a look how the company is valued at this moment. And at this moment, the share price is around $36.41. It has a market cap around 14 billion, so it leaves a lot of room for the company to continue moving higher. And at this moment, it doesn't have a PE ratio because the company is not making any money. But now let's take a look at the forward PE. And in the forward PE, the company is around 85. So you can see at that number, the company share is a little bit expensive. Now in the income statement, we saw the company generating a really good revenue. The average is around 25%. And the balance sheet, one of the most important things when the company is not making any money is to have a positive cash. And as you can see, the company has around 920 million in cash and around 345 million in debt. Now in this screen, I'm actually surprised. It is held around 89% by institutions. That is a really good number, and the short ratio is around 9.40%. I would have expected this company to have a higher short ratio because the company is not making a lot of money. But now let's take a look quickly at the stock chart, and we're going to take a look at the weekly stock chart because the company has done a really good job during the last few months. Now as you can see on the screen, the RSI is almost at the 90, and the RSI is the relative strength index. It measures how the company is oversold or overbought. Anything over 70 means that the company is overbought. And the share price can continue moving up even if it is over 70. It is more like a caution indicator. Now on the chart, the company has shown that it has created a 4-step pattern, and that is the famous ABCD pattern. From the point A, which began in April, to point B, which was on July, the company had an amazing run, and then the company moved down a bit during the next 2 months. And from September to November, the company has continued moving up a really fast pace. One of the key metrics though, the volume has been really well during the last few months. It has been really positive. The positive volume has moved the stock price to new highs, and the performance in 2017 for Square has been been really amazing. The company has gone up almost 170% during the year. And in the following screen, you will see that the company has outperformed a lot of the big tech companies. So over the 12 months, the company has gone up over 200%. The next one on the list is Alibaba, and Alibaba is not even 100%. And the competition, which is PayPal, doesn't even have half of the performance. Now, those companies don't necessarily have 100% of a Square business, but it has a little bit of a portion of what Square is doing. So I do think that Square has a really good business that implements technology. And there are only two concerns. The first one, and the most important, is that Jack Dorsey is the CEO of Square and Twitter. And I think he needs to leave one of those companies. I think he should only focus on one of the companies. He has done a really better job with Square than he has done with Twitter. And the second risk is that the company has gone up such a huge amount in 2017. Now, keep in mind that doesn't mean that the company will stop growing in 2018. If the company continues to perform a really good business in 2018, the share price is gonna move up at least 40% for next year. And for me, I would not invest in this company at this moment just because the company has gone up such a huge amount. And the company is not making any money. However, within the next 2 years, I think the company has a really good chance on being positive. And that is gonna be everything for the video. Please leave in the comment section below if you are investing in Square. I really like the business, and Jack Dorsey has done a really good job running Square. And don't forget to subscribe. I'm gonna continue making videos about the stock market, personal finance, and how to make money online. I'm gonna thank you once again for watching the video. Have an excellent day, and take care, my friends.